then accumulation. That is what the basic entails, you get. But right now we'll be touching our advanced market structure. This is where I will throw more in light about how price works. You get through the years of studies.
Okay.
Through the years of studies, how price works. Advanced market structure. I hope you're writing it down. Slash.
You don't need to tell me that.
Stretch algo structure slash algo structure. My PC is a bit low, but I don't mind charging it anyway. So, first of all, you need to understand that this algo structure, there is what in algo structure, there is what we call the types of algo structure. We first of all have the swing structure, we have the sub and the minor structure. In this algo structure, we have the swing structure. Don't worry, I'll explain properly. Just note down. In this, we have the swing structure. We have our swing structure. Swing structure. We have our substructure. We have our substructure. And we also have our minor structure. The most important one here is the swing structure, but we'll talk about it soon. Okay, we'll talk about it soon. Whenever you hear what we call swing structure, just know that we are talking about uh, swing points from higher high to higher low. You get from lower high to lower low. From lower high to lower. Sorry, from lower low to lower high. You get. We are talking about swings from one swing to another. You hear me?
Yes.
I want to explain I want to explain what swing structure means before I start giving you full details on how to go about it. Whenever we talk about swing structure, we'll talk about uh, this the point, the swing point in the market, which is the higher high to higher low, and also lower low to lower high. Those are the swing points. Hold on, let me write it out. Keep notes, keep notes. It's very important that you know this. Here we'll talk about this swing point of the market. We'll talk about the swing point of the market. Let's talk about the swing point of the market, which are sorry, which are our higher high to higher low. Higher high to higher high to higher low. And and lower low to lower high. These are our swing points in the market. You see now the reasons why I told you guys to practice and practice and practice your higher highs to higher low, right?
Yep.
You can see the reason now. Then then our substructure is like a retracement. It is a retracement in the market. It is a retracement in the market. Hold on. Let me just visit the toilet. Sorry about that. I needed to use the toilet. Okay. It is the retracement in the market. It is the retracement in the market. RT. It is the retracement in the market. This spelling is wrong. Hold on. Is this not the actual spelling of retracement?
It is. That's what I wrote. I don't know of any other spelling.
My PC is ranking it bad. Alright, so let's continue. Then we have our minor structure. Minor structures entails like the continuation, like when the price continues from a location, you get. When the price continues from a location, you get. Let's say a price retraces backwards, and also you get after retracement, you get. Then market continues its direction. That is what it means by retracement. You get retracement. So, sorry, that is what we mean by continuation. After retracement comes continuation. You get? Can you hear
Okay.
me? So it is.
Okay.
It is the continuation. Hold on. That comes after the retracement. That comes after the retracement. Then this comes. Okay, this is a retracement that in the market. Alright. So this is the actual meaning of the three, the three important aspects in algo structure. You get. We have these three as the three important aspects in the algo structure. You get. I will go ahead and show you the the pictorial representation of all these, like the substructure, the minor structure, and the swing structure. Remember, your swing is always the most important. Your swing is always the most important. You get. Your swing is always the most important. Sorry, someone wants to join the class. Welcome. So your swing is always the most important aspect in this particular trading. You get. Your swing is always the most important. So let's keep going. Now I want to show you the pictorial aspect of the market, the pictorial aspect of the swing, sub, and minor structure. Remember when I taught you guys your higher high, higher low, and also your higher high. Can you remember that, Grace? Can you remember that, Grace?
Yes. Yeah.
Yeah, we mentioned that this particular spot right
Yes.
now is your higher high. Yes. Remember?
I'm not seeing your screen.
Maybe it's your net.
Okay.
Okay. Can you see it now?
Yes. Yes.
We talked about here as your higher high. Then we talked about here as your
Yes.
lower. You get your higher low. Sorry, your higher low. Talked about here. Let me identify
Higher.
it. So now in algo structure, we know this point. Let's say we have something like this. Let's say we have something like this. Hold on. Hold on. Let's say we have something like this. Let's say we have something like this. Let's say we have something like this. In algo structure, in advanced market structure, we know our point one here, this place to here, as our swing structure. Again, let me mark it out. Let me use this and mark it out. We know our point one here as our first low, and also here as our as our high. You get. We know here as our swing structure. This particular place is our swing structure. Let me mark it out for you properly. You get. I know you have questions because it looks like this one, right? It looks the same thing like this, right? Right?
Mhm.
Uh-huh.
Yes.
It is also swing. You get. There is a substructure. This is a substructure. This particular place is a substructure, and this is your minor structure. But minor structure stops immediately at this break. At this break, which is a break of structure. You get. This break is also known as a break of structure. Remember when I was teaching you guys about your higher highs and higher low. You get that in order to validate this higher high properly, this higher low has to break here properly. This break that happens here, it's called break of structure, break of market structure. It is called break of market structure. You get. And also your minor structure, which is the continuation after this substructure, which is the retracement, stops at this particular spot. It stops at this particular stop. You get. This is your minor structure. This is your minor structure. From here to here is your minor structure. Then from here to here is your substructure. Then from here to here is your swing structure. You get. Remember the explanation, higher high to higher low. This is your higher high, then this is your higher low. You get. On the reverse, it's also your lower low to your lower high. You get the point now, right? Let me name
This
it
is
out.
kind of confusing here.
Yes, it will be confusing at the first place. You get. I don't expect you to understand immediately. You get. So let me just draw it out. Swing structure. Swing structure. This is your swing structure. Hold on. This is your swing structure. This point from point 1 to this is your swing structure. Then from here, let me mark it like this. Let me mark it like this. From here, this particular region. Let me use another color. Let me use another color. I guess. Let me use another color. I'll use another color for this. I'll use another color. Okay, let me mark them fully. Yeah. Sorry, pardon me. Let me use another tool for this. Let me use another tool for this. Let me use this particular tool.
That's the substructure, right?
Exactly. Exactly. This is your substructure. And thank God you are getting it fast. At least this tool is making it very good to identify, right?
Yeah.
This is now your substructure, which from the meaning it is a retracement in the market. You get. Then this one is your swing structure. This is your swing structure. Hold on. Hold on, let me expand it a little. Wait, hold on. I think someone wants to join the class. Okay, Chidima, you can ask your question. You can ask your question. Huh? Ask your question. I can hear you. I can hear you. Ask your questions. Hold on.
Sorry, I was looking for the mute button.
Okay, mute button. Alright.
Sorry, I just wanted to confirm. I thought swing basically defines the movement in the market, like the total movement of both the higher highs and the higher lows.
No. It only deals from your higher high to your higher low. You get from your higher high to your higher low, which is this movement. You get this is your yeah, you are correct. Actually, you are correct. But just know that this is your swing also. You get this is your swing also.
Alright,
It's important you identify them properly. You get before the overall trend can be your swing as well. You get just
alright.
hold on. Let me just explain this a little before I answer your questions. Let me outline this particular one before I answer your questions. You get hold on. Sorry. This is your sub. This is your substructure. Substructure. Then this is your minor structure. Hold on, I don't want the thing to be messy. Minor. This is your minor structure. You get. Can you see it now?
Yes.
So, in our swing right now, in our swing structure, first of all, you need to know that this entire legion is your swing. And also, from here, in between swing structure, there is a minor structure. You get, in between a swing structure there is a minor structure, but know that the overall trend is your swing structure. That's the first step to identifying your swing. First step to identifying your swing. Then, to your question, can you hear me, Chidima? Can you hear me?
Yeah, I can hear you. I
To
can
your
hear you.
question, identifying your algo structure, which stands as your swing structure in total, deals with liquidity itself. You get, inside this our overall algo, there are things we call liquidities. You get, there are things we call our substructure, and there are things we call our minor structure internally. But you need to understand that this particular place right now, this particular phase that you are seeing, you need to identify them properly first before you can now advance into the middle part of identifying where your structural liquidity is. You know, normally our structural liquidity has to be taken out. You get, in depth of this overall advanced market structure. That is when you start identifying your how what's it called, liquidity itself. But you need to understand that this place is your swing. From here now, from this particular point, it is your swing structure up to the higher high. Up to the higher high is your swing, just like here. From here right now up to here is your swing structure. It is your swing structure. There is no negotiation about it. You get. So now there is an in-depth in this. For Grace, Chidima is very advanced, so she just needs a few things. Grace, for you right now, you need to see this as it is. Then before I can venture into the real identification of structures and liquidity itself. You get, because the swing structure itself can be seen as a liquidity. You get, it can be seen as a liquidity. You get. So with this thing now, I hope you are satisfied with how to identify your swing structure whenever you see them, right? Grace,
Yeah.
is it confusing? Let me know if it's confusing. If it's confusing you, I will just
No,
repeat
no,
the
no, no.
explanation again. Inside your swing comes your
I get.
minor. Inside your swing, there is also a minor structure there. Minor structure, as the definition is the continuation of the market that comes after the retracement, which is your substructure. You get, but the overall push, it's called the swing structure. It is called the swing structure. You need to know this because it also works on inducement. It also works in algo, normal algo structure, which I'm teaching you, and I also teach you the inducement, but it will be the last thing I'll teach you. You get, it will be the last thing I'll teach you. So right now, you can screenshot this because I will clean it up. I'll clean it up. I'll clean it up so I can venture into what I want to explain. Okay. I'll venture into what I want to explain. Okay. Have you done it? Have you done so? Let me know.
Yeah.
All right. All right. So hold on. Let me just. Ah, this is not working like this. I don't want my screen to be messy. That's why I'm deleting all these things. So just hold on. Let me use another screen. Hold on. Let me use another screen. So let me just go towards this part. So having this in mind, having your your swing structure, your substructure and minor structure in mind, having these three things in mind, we will now go to the in-depth of algo structure. How to see your algo structure. You get normally what I explained to you. Remember your higher highs and higher low, right? You remember your higher highs and higher low, right? Your normal higher highs and higher lows.
Yeah.
You get normally we expect the trend to move like this. We expect the trend to move like this. And it does move. Oh. Normally the market moves like this, but it's not always like this on the lower time frame. That's the honest truth. It is not always like this on the lower time frame. So the in-depth of algo structure will identify how it should be, how prices always react with the studies of the past and everything. So with this now, let's now see how the algo structure can be seen with the study of substructure, minor structure, and the swing structure itself. This is what normally happens in the market. Let's say we have our low, then we have our normal break, then we have our first break, which is your structural liquidity. You get? I understand that I have not explained what liquidity is, but liquidity can be seen as the money, where money lies in the market. It can be seen as money in the market. You get? It can be seen as money in the market. You get? So now your swing structure can also be seen as also money gap in the market, where the market will always come and take out. You get? It can be seen as where the market will always come and take out. You get? Let me just draw it for you so you understand what I'm saying. We have our rules here, rule A, B, and C. You get? I don't know if you are getting it, but if you're not getting it, let me know so I'll explain more. You get? You understand what I'm saying? Can you hear me?
I can.
If you don't understand what I'm saying, just be honest. Tell me you don't understand what I'm saying. Let me find alternative way to explain it properly. You get?
I'm understanding.
Are you sure? All right. All right. Let's continue. We have our A, B, and C. This always happened in the market. It always happens in the market. You get? Even today's trade that I took, it's just this same thing. Hold on, I'll show you how it's done. The in-depth of this algo structure rests on this. You get? Normally we all see our higher highs and higher low like it will be perfect like this. No, it cannot be perfect. That is when algo structure takes place. Remember that here is your substructure, right? Then here is your minor structure. From here to here is your minor structure, right? Then the overall is your swing. So now let me explain again what happens inside this trend. Inside here. We still have here right now that I'm explaining now. This particular place I'm talking about. Hold on. This particular place I'm marking out ABC. We can still identify them. This is your overall swing. But inside this swing now comes our first of all we have what we call structural liquidity. When we are dealing with liquidity itself, you get? I don't want to start explaining other liquidities, but the most important one is your structural liquidity, which can be seen as your B. Remember I told you I'll be heading the I'll be going directly to the point. You get? I'll be going directly to the point. We also have our transactional liquidity. We have other types of liquidity, but I will not be explaining all those things now. I want to just explain structural liquidity. You get, it is part of the algo structure. You get, so we have different types of liquidity. I don't know if I will touch it now. Should I touch it now or maybe later? Which one will be better? Hmm?
I think you should just do it now. Start with the definition.
Okay. All right. All right. All right.
The type.
All right. All right. All right. As we have three types of market structure, advanced market structure. That is the same way we have three types of liquidity. First liquidity we have, understand that liquidity is just money or the fuel that moves the market. You get, let me write it down. Let me write it down. Liquidity, let's just focus on liquidity for now. You get, then I'll identify them here. You get, let's talk about liquidity right now. You get, we already learned what our advanced, which is algo structure is, which is your which is your swing structure, your substructure, and your minor structure. You get, then let's learn about liquidity, then we'll put it together so it will make more sense. You get, instead of explaining only one liquidity. You get, so the concept of liquidity. Okay. Know that liquidity can be defined or can be seen as money in the market, where money lies, or fuel that moves the price. Where money lies, or I can just explain it as money slash. You get, I like using this one, fuel that moves the market. Fuel that moves the market. Market, or let's say price. No, price will be better. You get, fuel that moves the market. That is what we call liquidity. You get, and this liquidity now, you understand what it means by money, you get, or fuel that moves the market. All right. Then this liquidity has three types. Which one is your transactional liquidity? You get, one is your transactional liquidity, two is your structural liquidity, and three is your inducement liquidity. You get, so let me write them down. Transactional liquidity. I don't know if S should be here. Transactional liquidity. Then we have our structural liquidity. Hold on. Structural liquidity. And we also have our inducements. I use inducements very well. You get, inducement liquidity. That is exactly like the expansion in the market. I love using the expansion in the market because it creates a broad view. It creates a broad view for everything we know in liquidity. You get. So first of all, our transactional liquidity. What is the meaning of our transactional liquidity? This our transactional liquidity can be seen as corrections in the market. Corrections in the market. You see this our low here, higher high, higher low. You see this our higher high, higher low, right? These are corrections that are left for market to come and correct. These are our transactional liquidity. You can see them. Let's say now we have something like this. Let's say we have something like this. You see the market going up and down, up and down. Hold on. You see the market going up and down. Something like this. This is your transactional liquidity. This is your transactional liquidity. Okay, this is it's like a correction. Price has to come and correct all these things, all these lows. It has to come and take them out to fuel the market. You get, because first of all, what you need to know that is that, let's say now price does something like this. there are some retail traders that buys from this level. You get, their orders will be here. Same thing here. So now these people's positions are here. These people's money are here. You get, for price to continue its movement, it needs to clear some people. If you are not careful, price will clear you out. You get, to take your money to continue the upwards movement. You get, that is what is called transactional liquidity. It is the correction in the market. I'll just write correction here. It is the correction. If you don't understand, let me know. You get. Then we have our structural liquidity also. Hold on. If you don't understand, let me know. This, our structural liquidity, is our continuation, just like this, just like the substructure, just like the substructure. It is our continuation in the market. You understand the substructure, right? Can you hear me?
I don't understand it.
Okay. Let me just explain properly. Remember when we talked about substructure here? You remember when we talked about substructure? We said that it is the continuation in the market. Hold on, this is minor. This is your substructure. It is the retracement in the market. You get. It is the retracement in the market. You get. So now understand that substructure, which is a retracement in the market. You get. What is that substructure coming to take out? What is he retracing to? Where is he retracing to? You get. Remember the word retracement. That is pushing back. It is coming back to test something. You get. For the retracement to happen, there must be an occasion. There must be somewhere price is going to. You get. For the retracement to happen, you get. That is why we have our structural liquidity at that same level, which will have our substructure. You get. Okay, let me put it in a way. Let me put it in this way. This structural liquidity deals with this. You know, we talked about this thing. You get. We talked about this thing. Hold on, let me delete this one. Or let me just use this one. You see this move now. This can be seen as your swing. This can be seen as your swing. You get. It can be seen as your swing structure. You get. Can you hear me?
Yes.
Can you hear me? Then we have this. We have this move. We have this move for what? Retracement. This is your retracement, right? Inside this your retracement, you will see your structural liquidity. Inside this your substructure, you get. That's Chidima. Can you hear me?
Yeah, I can hear you.
You see the overall trend right now. When you were talking about your swing structure, you get. Your swing structure, which we know as our move, our intensive move. You get.
Yes.
You understand the difference now between your structural liquidity and your swing structure. And sorry, the similarities between your structural liquidity and your substructure.
Yes.
I don't know if you understand. If you don't understand properly, let me explain again. Let me clear this thing and explain again. Listen, let me explain.
I don't.
Let me explain. This is your swing. We know this as your swing. Let's just look at it as our 4 hours candle or daily candle. This can be your swing, right? Then we have our substructure, which is the retracement in the market, right?
Right.
Then we have our minor, which is the continuation to form a structure, to form another structural, to form another swing structure, right?
Right.
Now, understand this. Inside all this move, This entire move can be seen as your swing structure. It depends on the time frame you are looking at it from. First rule, it depends on the time frame you are looking at it from. Because one thing DAX failed to teach us is that it was self taught. You get, I taught it myself. Like I learned it myself in order to start executing trade better. You get, I understand what I sent to you, but what he failed to understand, what he failed to taught us is that it depends on the time frame you are looking at. Let's say this time frame right now up here, it depends on where you are looking at it from. This now, inside this, let's say in 1 hour, you can see this same thing, or let's say higher highs and higher lows inside all this. Inside all this, but I am using the general, let me say I'm using a daily time frame here to teach you. So inside this daily time frame, which is this swing structure, which let's say which is this swing structure, yes, you can see your core algo structure within this stuff. Now you can see your liquidity also, depending on the time frame you are looking at it from. I will show you a practical example, but I want to just use this one to make you guys understand the point here right now. Inside this your swing structure, you can see this entirely. Inside this, you can see this entirely. That is why you asked that question initially. Isn't all this called your swing structure? You understand now? Hello, can you hear
Yeah, I
me?
do.
You understand now? Inside, depending on where you are looking at it from. You get. So now,
Okay.
Grace, as I explained to
Sir.
her, it is still the same way. Inside this our move, your higher highs, higher lows, your swing structure, you can see your liquidities, which I'm trying to explain. You get, you can see your liquidities. Don't worry, I'll explain why I marked this ABC out. You get, ABC out. You get, I'll explain properly why I marked it out. So now let's continue with our structural liquidity. This structural liquidity, as we know, is a continuation in the market. You get, which, as I was explaining to you, you get, I was using this as example. You get, the continuation in the market. You get, for this substructure to happen, price needs to go to a limit, to a particular place, which is to take out this particular liquidity. Which is the structural liquidity. We get, and once it takes it out, then we have our structural liquidity. Which is the normal continuation, which can be seen as this. You get, but before the move, we know structural liquidity as this particular move. Don't worry, I'll explain it here, because this is the entire graphic of this is the entire graph, would I say graph, or the pictorial aspect of structural liquidity. Okay, when we are talking about structural liquidity, this is what we mean. Okay, this place now is what we mean as our structural liquidity. Okay, don't worry, I will explain it. I know it's confusing. I will explain. You get, I will explain properly. So now, let me write this down first. Continuation. Continuation. Then let me explain this expansion. It's almost the same thing as structural liquidity, but in structural liquidity, whenever you talk about structural liquidity, we talk about, like, there are something, there are criterias you must see in structural before you can identify this place as a structural liquidity. But inducement is just an expansion in the market. You don't need to see the criteria that involve structural liquidity for inducement to happen. You don't need to see the criteria that are involved in structural liquidity for inducement to happen. You get. So let's just call inducement our expansion. You get. To be very honest, I trade expansion better more often than structural liquidity. Like I trade inducement more often than structural liquidity, because these days structural liquidity doesn't really work that much. It doesn't really work. It works, but it doesn't really work. So me personally, I prefer inducement because you can see price induces levels almost every day, almost every given day. You get. So now with this explanation, let me go back to our structural liquidity. Hold on, let me know the time left. So I don't know if I can explain. Okay, we still have more time for this explanation to happen. Do you understand the transactional? Huh? Grace, can you hear me?
Yeah, I can hear you.
Do you understand the structural liquidity? I need to know if you understand this particular one at first before I venture into structural liquidity. The transactional, which deals with your trend line. You get. You can call it, let's say, here. This is. Remember how I explained it to be? Can be seen as something like this. Sorry. This is your transactional liquidity. Do you understand it?
I don't. I think it's only the structure I get safe.
Only the structure I do understand. Okay. Let me explain again. When we talk about transactional liquidity, we talk about the corrections that the market has to take. Remember before, as I was explaining our higher highs and higher lows, and our higher highs and higher lows, our higher highs and higher lows. All these are living liquidities. They are living space here. Let's say you now as a retailer, let's say you are buying from here. Normally your higher low, you buy from here, you get, take your profit at this level, then buy from here. This place you are buying from, is like a money trap, is a trap that the market will always come and take out. You get. Haven't you seen a scenario like this in the market? Let's say price does something like this. Let's say it clears out these two automatically. Haven't you seen something like this? Hold on. Let me just use this one as an example. Let's say now hold on. Let's say now we have price doing its normal higher highs and higher lows, you get. Then all of a sudden you saw this move. It came here and spring up back to continue the upside. Have you seen something like this before?
In the real world?
Yes, in the real chart, in your real chart. Have you seen something like this? If you study your chart properly, you will see that this thing happens at times. It happens at times very, very well, especially on your lower time frames, especially in your, let's say, 30 minutes, 15 minutes, 1 hour. It happens very, very well. But you don't tend to see that on your daily that much. Daily 4 hours, you don't tend to see that much. But once it's your lower time frame, you will get to see that this thing happens. You get, let's say you came here, you saw yes, your higher low, yes, you marked it out with your Fibonacci 50% or 62%. Then you took your buys up. It went your way. Second one went your way. The third one went your way. Then all of a sudden you saw price dipping into those three places you took your trade, then continuing the upside. It is called transactional. All those space you left here, all those buys position you left here, let's assume now that your buy position is still active, the price will take you out automatically. This is your liquidity trap, like is your transactional liquidity, which are the correction that will always happen in the market. Okay? These are your transactional liquidities. Do you understand now?
Is this one supposed to favor you or what? Like this one that came down.
Yes, it's supposed to favor you only if you know.
The
Only if
reduction
you
in
know.
price.
Yes, it's supposed to favor you only if you know. But the people that doesn't know, that buys from here, buys from here, and buys from here will automatically be caught in the trap. You get? But if you know, then you wait for price to come at this level so that you can make your trade. You know that this is a trap. This is a trap that made by the big boys. You get? Let's say the financial institution. Especially news does something like this. You see news, that fundamental analysis. You remember your news, right? It makes it,
News.
yes, it makes this move very very well. It makes this move. That's why I told you before. I don't know if it's in this class I said it, but I don't lose in trades. I don't lose in news. News always goes my way. It always go my way because I already know where it's coming to. You get? I'll just put my order. I'll just put probably buy limit or sell limit. You get? Once it comes, it taps it. It activates it straight up upwards. You get? So that is how. That is how. You get? That is how we see it. These are your transactional liquidity. It's supposed to favor you only if you know about this transactional liquidity. Only if you know about this correction that's supposed to happen. You get? Only if you know. Then this swing structure. Let's talk about. I don't know. Is this transactional liquidity clear now? Is it clear now?
Yes.
Mm-hmm. The structural liquidity. This is exactly your structural liquidity. This is exactly your structural liquidity, and it can be seen inside your swing structure. It can be seen inside your swing structure. It happens almost all the time, but inducement happens all the time. For me, inducement liquidity happens all the time. But this structural liquidity, once you see it, you can't unsee it. You get? It must surely react properly. Okay. So there are many types of structural liquidity. You get? There are types of structural liquidity. Remember that this structural liquidity is the continuation, like is the continuation in the market. You get? Is the continuation that happens. Let me explain it. Is the continuation that happens in the market. Like it's always at the low before the main low. You get? It always happens at the low before the main low. Let's say this is the low. You get? Before this main low. Where is your structural liquidity? This is your structural liquidity. Like it always happens inside here, inside your structural liquidity. Okay, let me show you a typical example in the chart. Let me show you a typical example in the chart so you not get confused. You not get confused. Let me show you a typical example. Remember the assignment I gave to you, right? You remember the assignment I gave
Yes.
to you guys? Okay. To identify your higher highs and higher low, right?
Yes.
Okay. This can be seen as your structural liquidity. Sorry, hold on. This is your sweep. I'll explain the criteria. This can be seen as your structural liquidity. This it's like the last low before the main low. This is the main low. This is the last low before the main low. You get? That is the same thing I am drawing here. It is the same thing I am drawing here. It always happens at the last low before this main low. Go to this guy's chart. Hold on. I don't know if I could share the screen here right now. There is this guy that sent on the assignment we gave. Hold on. On the assignment we gave, the second guy that posted something. You see that spot he wrote downtrend. Later on you check it. You get? Later on you check it. You will see on the place he wrote downtrend. There is a small low before the main low. These are your structural liquidity. Later on you can check it. Later on you can check it, but for the sake of this video, I just opened it. So that the video will record it also, because I'm on record right now. Okay, you get. So Chidima, now you understand the difference now, right? Can you hear me, Chidima?
Yeah, I do.
You understand the point now. Inside this our swing structure, you can see the entire liquidity concept,
Yeah.
especially these two, this inducement and structural liquidity, especially this inducement and this structural liquidity, especially these two, you get. So now we'll talk about this particular structural liquidity tomorrow, sorry, on Tuesday. Use today, go back to this video, learn your structure, you get. Learn your structure, swing structure. Grace, I'm talking to you. You hear me?
Mhm. Yeah.
Learn your swing structures. Learn your sub structure. Learn your minor structure. You get. Then come back and learn your liquidities. Learn the liquidities. On the next class, after you might have digested the explanation, I will explain these two. I will explain this structural liquidity and inducement. Structural liquidity and inducement. I use these two very well. But the most important one for me here right now is the inducement. And the inducement is very simple to see. It is very simple to see. You can see it anywhere in the market. Like it's like everywhere in the market. It's everywhere in the market. That is what I use very well. I use it very well. Aside the structural liquidity, which is this, I'll explain this inducement liquidity. You get. It will take you time to understand, but I will try as much as possible to come up with a better explanation on how to identify this whole entire liquidity inside our structure, inside our structural liquidity. Sorry, inside our swing structure. You get the point now. On your
Yeah.
the class on your on this is Monday. We have another class on what on Wednesday, right?
Mm.
Wednesday 9 p.m. at the dot. We will have another class. Okay, and that class will be based on liquidity only, because learning your substructure and the minor structure with your swing structure is pretty easy to identify. But now identifying this liquidity inside your swing structure, sorry, your what's it called? Yes, swing structure is pretty hard to do. Like it's very hard to identify them inside. So I'll come up with a better way to explain these liquidities inside this swing structure, especially swing structure, especially structural liquidity and inducement. You get, especially structural liquidity and inducement. You get, this transactional liquidity happens there, but like I would, for now you have to avoid it, because if you make a mistake here, the news will fuck you up. You get, will F you up immediately. So for now, you just need to know what it is. You get, you just need to know what it is. Then we'll talk about structural and inducement liquidity once it's Wednesday. You get, I know we'll talk about this. I will still hammer on it for like a week plus. Next week we'll still talk about it. Next week we'll still talk about this structural liquidity, so it will digest fully in you. We'll talk about it this Wednesday. We'll talk about it on Friday also. You get, so you can identify it properly. You get. I understand that I was rushing before till we get to this part, but this particular part right now, you have to calm down to get it. You need to get it, because this is exactly what works in the market. Don't worry about the higher highs and higher low. It is important that you know them. Okay? But this liquidity concept now is the key important aspect in the market, because without money, there will not be forex trading. Without exchanging of capitals, which is money, there will not be there will not be anything like forex trading. So understanding the concept of liquidity is like you getting 50% knowledge of this market. 50% knowledge of this market, and also you can use it to trade with this same bank. You can use it because this bank always respects this liquidity. They always respect the entire liquidity. They always respect it. Why did I say they always respect it? Because normally everybody's waiting, everybody's looking for money. You get, so they want to take your money. You get, they want to take your money. You know, the more money you and the other we, the retail traders, inject in the market, the more money they take out from the market, the more money they have for themselves and to run the entire government system. So now they will always respect this thing. They will always respect this liquidity because they know that yes, once they set this trap for you, set this trap for you, and set this trap for you, you will fall for it now. And they will make money once you fall for it. You get the liquidity now. You get the
Mm-hmm.
explanation now. So
Yes.
this is the in-depth to know when they will buy and when they will sell. You need to know this. You need to know this. To know when the big boys will buy and sell, you need to know this. So we'll talk about this. This is just let's just call this class a brief explanation on liquidity. A brief explanation on liquidity. You get a brief explanation on liquidity. Then the next class will be talking about all this liquidity again. You get all this liquidity again. You get the point now?
Yeah.
Mm-hmm. So that will be the end of the class for today. My time is almost out. This thing has like I think 30 minutes max. Okay. So that will be the end of the class for today. Yes. Then I will be explaining about it next one on the next video. You get on our next class. Yeah.
Okay, so I'm just gonna learn more on it on my own before the next class.
Yeah. Properly. You need to learn more on it. Okay. I get. Venture into it. Study and study again. You get. It will help you. It will help you. Yeah. All right. That will be all.